Welcome back, everyone. This week we're going to be discussing online sports betting and my preferred way of playing it, which is through Genius Sports, ticker symbol GENI. I should also note that I do have some shares in Flutter as well, which owns FanDuel, and it's a smaller position. And you can see all of that if you head on over and look at my weekly performance report, or wait for that video to come out. So with that out of the way, let's get into this article. Now, please understand that I'm going to go and talk about things and then work my way. If you want to, you can probably fast forward about 2/3 of the way through this video if you want to just get to the Genius Sports portion of this. But you do you, and I'm going to do me, so let's get into this. Macro overlay. As more and more states adopt online sports betting, the more accepted, mainstream, consensus, normalized, and tolerated it will become. That's actually kind of a bullish feature that shouldn't be overlooked. If gambling is a tax on the poor, and you also believe that the middle class is being eroded into the lower socioeconomic rungs, then doesn't that mean that more people will be gambling? More and more people are checking out of life and living on their phones. And aren't that where online sports betting takes place? Is online, isn't it? What might the current fiscal dominance and deficit spending allude to? Look at this chart. That sure looks like a bullish pattern of higher highs and higher lows, doesn't it? For one, it means that governments are more desperate for revenue. So they started allowing, I can't say that word, and cannabis to become legal. Did I just say it? Anyway, it also might mean that inflation is going to be stickier than before, and that's not necessarily a bad thing for the government. It helps deflate their debt. So, higher deficit spending with above normal inflation leads to monetary illusions, as Paulo Macro has mentioned before. The reason for this is because people think in nominal terms instead of real terms. Imagine these three scenarios. Inflation grows at 7% while your wages grow at 5%. Inflation grows at 2% while your wages stay flat. Inflation is 0% while you lose 2% of your wages. Just think of your employer giving you a 2% pay cut. The outrage that people, by the way, for all intents and purposes, it's the same difference within the confines of your purchasing power, because interest rates will more likely than not be different under these scenarios, and that has implications, but let's not get too carried away with the example. The outrage that people would manufacture over the third scenario is orders of magnitude more than scenario 1 or 2. That's because they live in a nominal world. It also helps when people don't track the actual loss of their purchasing power and instead at best have some vague and loosely defined idea. But people don't think about purchasing power as they do about how many dollars they have. My point is that people will spend more money in the first scenario and less in the second and third scenario. And since I think we're in the first scenario, that bodes well for discretionary spending, i.e. gambling, because people are deluded in thinking that they're richer. Remember earlier when I mentioned that gambling is a tax on the poor? That's true-ish. You could also say that idle hands make the devil's workshop. People play for the fun that's associated with the anticipation of a reward. And as more and more people isolate themselves in front of their screens, living vicariously through social media and entertainment, and live out their lives of quiet desperation, it looks pretty good for digital discretionary spending. And in this case, in the form of gambling. People have a preference for short-term cheap thrills over long-term meaningful pursuit, behaviorally speaking. And what is more consumatory and satiating than clicking a button or swiping a screen every couple of minutes? Hell, you might even get some cute noises and artificial confetti coming out of the deal. Looking at you, Robin Hood. Dopamine hit, dopamine hit, dopamine hit, dopamine hit. Ease of access makes addiction all the easier. Short-term trading volumes skyrocketed when stock brokerages removed trading costs. People can't help but poison themselves. They poison themselves with food, with infotainment, with sedentary lifestyles, alcohol, drugs, toxic relationships, social media. You get the point. Just make something easy and accessible, and you'll see how moral and conscious people really aren't. This all fits into my framework of the bust out, control fraud, and principal agent problem of our country and most establishments and institutions, and so it's a scalable phenomenon. People just don't like how it emotionally resonates with them. It feels icky. Fine. Don't monetize the stupidity of the voter base. Just suffer from their stupidity and never try to offset it. And investing in this sector could be an opportunity to offset it. There's other ways, but this is, if you want to look at it from this cynical stance, then this could be one of those ways. Gambling has been around since time immemorial, and now it's getting steroids and updated to the 21st century. As people become despondent and desperate, they adopt a defeatist attitude, and as such, they capitulate to their primal emotions which drive them to do many things, gambling being one of them. Look at what happened during the shutdowns a couple of years ago. People became fat, drank too much, lethargic, both intellectually and physically, and went to what they consider a casino. Stocks. Remember the meme craze of that time? They were bored, and idle hands makes the devil's workshop. People love to live vicariously through their tribes, aka sports teams, and what better way to demonstrate that allegiance than to literally bet on them? Between the mixture of economics and behavioral psychology, you can start to see why this sector is growing to the extent that it is. Before we get to looking at some polling data, it's worthwhile to mention the capacity of humans to justify their thoughts, feelings, and general situation in life, and how that should never be underestimated. Through incremental progression, creeping normality, and shifting baselines, people come to terms with things by working out their cognitive dissonance and retroactive and revisionistically accounting for what they used to believe, or to never consider how their current beliefs contradict the alleged beliefs they once had. Literally, as I was putting the finishing touches on this article, I read this today. Link in the article. PORAC, which is the largest law enforcement group in California and the largest statewide police group in the country, opposed Proposition 64, the 2016 voter initiative that legalized the unspeakable word in California. But the group's opinion has shifted as the unspeakable word has become more normalized among police officers in the state, according to Marvel. What happened to all that morality and ostensible reasoning that cops had for condemning it? Poof, gone. In less than a decade. That's because it never existed in the first place, in large part. 8 years. 8 years of normalization is seemingly all that was necessary to change one's alleged deepest beliefs and values. Because remember, their opposition to it was, the destruction of the family unit and this and that and blah, blah, blah. Has that changed all of a sudden? Or are they now saying, I was absolutely ignorant and a fool to believe those things because I was biased and full of propaganda and ideology? How many of them are admitting to that? Kind of interesting, don't you think? Of course, they just want more money from taxes. And if you can go after the illegal growers, then you can redirect more money to legal companies, which are taxable. It's not compromising your morals and beliefs if you deceive yourself into thinking that you never held those beliefs to begin with. Humans are incredibly social. This means that they believe what others believe, or more specifically, they think they believe what it is they think others people think and believe. This is called pluralistic ignorance. Quite possibly the most important takeaway from this article, and there's a link to, I believe, the Wikipedia page of what pluralistic ignorance is. And what I just described, or have been describing, is just this. It only takes a marginal amount of people to shift the larger masses' thoughts. So, what are the masses thinking these days in regards to online sports betting? Moral indifference with a nice, intellectually lethargic and palatable platitude that excuses their indifference along the lines of, "Who am I to tell others how to live their lives?" I'm reminded of the quote, "The only thing necessary for the triumph of evil is for good men to do nothing." I do wonder how people reconcile the difference between the above and the below. Thankfully for us investors, people don't try too hard to reconcile incongruent thoughts and make them coherent. Majority of Americans are concerned that the increasing availability of sports betting will have negative consequences. Oh, okay, so as often as I gotta stop here. So I thought that didn't make sense when I read it. So this has happened once again. Actually, two things have happened once again. I go through a couple of different editing softwares. I need to explain this and expose my ineptness so that way you understand what's happening in this video if you are actually paying attention, because that didn't really make any sense what I just said before this image. And the reason that didn't make sense is because there's an image missing from this. Because I have a couple of different spelling and grammar apps I use to edit, and often enough, probably 20-30% of the time, while going between those applications, for one reason or the other, which I'm not really sure as to why, it will exclude images. And that's what happened here. So now you're going to have to go over to the site that I'm not allowed to put in the description link because I get shadow banned. So yeah, I guess if you want to make sense of this section, then you'll have to do that. But the image that isn't being shown is an image of how most people are indifferent towards the legalization of online sports betting. I think the question was, is online sports betting a good or bad thing? And I think that the average or the bulk of people, more so than not, said that it was either good or neutral. And then in that polling data comes this image, which is majority of Americans are concerned that the increasing availability of sports betting will have negative consequences. So this is important when the question you ask determines the answer you get. Because good or bad versus negative consequences. So are these people saying it's a net positive or a net negative? Or anyway, so that's why this does make sense. I digress. Let's get back to this article. When it's all said and done, though, more and more people are approving of sports betting. Whether approval means indifferent, tolerant, or an advocate doesn't matter. Just replace evil with sports betting in this famous quote. The only thing necessary for triumph to evil is good men to do nothing. I.e., the only thing necessary for online sports betting to triumph is for people who oppose it to either be neutral or not actively fighting it. More Americans approve of sports betting. Nice little chart. You might as well lump the no opinion crowd in with the majority, and in this case, the majority is now on the side of those who approve. And notice when the inflection occurred. It was when states started legalizing online sports betting, and the drop in no opinion correlates with the inflection of approve. Here's the article for those interested if you care about seeing this polling data. Growth. A preliminary assessment on my behalf seems to show that things are going well on the industry-wide level. I'm not going to dive deep into the weeds here about how many states are in what stage of allowing betting and what style of betting, whether it's online sports betting or iGaming. I'm writing this as a general overlay. All the charts pretty much look the same, up and to the right with double-digit growth. New Jersey was one of the first to adopt OSB, online sports betting, back in 2018, and that market is still growing in terms of GGR, gross gaming revenue. And roughly, call it 20%, 30% in there, and they're not the only ones. New Jersey isn't the only one. according to S&P Global. In 2000, link in the article. In 2023, New York registered a 24.2% year-over-year increase to finish as the state with the highest revenue at just under $1.7 billion. New Jersey up 31.9% to $1.01 billion, inched past Illinois to reclaim the second spot. Illinois revenue grew 26.1% to $1 billion, slipping behind Ohio. Pennsylvania was fifth with $686.9 million in revenue, up 15%. So here you have multiple markets, and this is important because we'll get into this in a moment about how we've kind of gotten past the 50% mark, let's call it, of online sports betting, and then the bigger states that haven't allowed it yet, it's not looking too great for one reason or the other. So you could say that the industry, it's not a state-led growth story much anymore because it's matured. But even with that being true, the states that have legalized it, or that have had it legal for, let's call it half a decade at this point, or at least a few years, are still seeing anywhere from 15 to 32% growth year over year. So that's pretty impressive. The above figures are in regards to online sports betting and not iGaming. This article doesn't cover iGaming, but that is something to think about. The next chart looks bullish, but once you adjust it for inflation, it's just baseline inflation adjusted growth. Of course, there's mixed information. The above chart suggests $200-ish, but then you get a chart like the one below, which is suggesting more than that. The first chart suggested the average individual is betting roughly $250 a year, while the second chart represents fourfold of that, almost $1,000 a year. That's how you can see this chart. You have the x-axis that says 12, and then you have the y-axis that says 1,000, which means that they spend 1,000 after 12 months, average lifetime value for all U.S. and Ontario cohorts since inception. And after 24 months, they're spending a little under 2,000, which is to say that the spending is slowing. But then, interestingly enough, then you get to 36 months, and then it's back to $3,000, which is the annualized $1,000. And then at 48 months, it exceeds 4,000. So it seems like there's a drop off at the 2-year, but then that's made back up, or things catch back up after 3 years and 4 years of the average LTV, lifetime value of bettors. The first chart suggests that the average individual is betting roughly $250 a year. The second chart reports 4 times that. The point is that even the more conservative numbers for this industry are suggesting that it's at least keeping up with inflation. With the amount of promotional spending that these companies are engaged in, I'd hope that they'd see a rise in their unique paying customers, and that's what we do see. This, I believe, is from DraftKings. The number of unique customers on our platform is rising. The bulk of growth for OSB has already happened, as I alluded to a moment ago. There's a couple of larger states that haven't opened up to it, and they might not for the foreseeable future. It seems that much of the future growth will come from the same state sales increasing and the introduction of iGaming. However, I suspect that big casinos might have an issue with the whole iGaming situation. To some extent, the world is the oyster of these bookies, which probably is not a preferable term to be used by industry insiders, but, well, is what it is. The NFL is expanding their reach too. They're opening the season, this upcoming NFL season. First game is in Brazil. And no, not Brazil, Indiana. Brazil, the country, on a different continent, known as South America. The point here is a simple one. The industry is growing and poised to continue growing at a nice clip. The names. You currently have what amounts to a duopoly of sports bookies between DraftKings and Flutter. Flutter owns FanDuel. There's other names such as Rush Street Interactive, but I'm mainly focused on the duopoly. That doesn't mean you should be focused on them. It means I'm focused on them. Then you have the data side. I just call that Sports Trader, ticker symbol SRAD, and Genius Sports, ticker symbol GENI. And those are the names I'm looking at there. New Jersey has been putting out information and it looks promising for FanDuel. And you can see the other names I didn't mention, the Hard Rock Bet, ESPN, Caesars, MGM, Resorts, blah, blah, blah. Even though not all of those are in New Jersey, those are other things that I didn't mention and I've looked at, but I'm not interested in them. As with most things in life, it's not so cut and dry. For instance, Caesars and DraftKings Sportsbook are the only ones operating in Maine due to the Native American tribes having a lock on things in that state. And those are the only two sportsbook that the 4 tribes partnered with. It's for this reason that I like the data names due to them not getting locked out of states like how the sports books do. Those are the people I'm calling the bookies, by the way. Sportsbook is a much more Overton window word to use. GENI, as I endearingly and conveniently refer to Genius Sports as, GENI provides services to DraftKings, FanDuel, Caesars, and Hard Rock. Florida has things locked up via the Seminole Tribe's Hard Rock Bet. This locks out both DraftKings and FanDuel. And don't forget that Florida makes up roughly 6.5% of the U.S. population. Then you have the fact that DraftKings has Oregon and New Hampshire and FanDuel doesn't. On and on this goes. A point I'm trying to make is that this isn't an issue for their data provider, such as GENI, as a consequence of it working with all the above names I mentioned. FanDuel, DraftKings, Caesar Sportsbook, Fanatics Sportsbook, ESPN Bet. Yes, you heard that right. Disney, after grandstanding and virtue signaling over years of saying that they don't want to participate in the morally mucky area of betting, decided that money changes values. Then you have Hard Rock Bet. The point is, Genius Sports caters to all of them, so they don't get locked out of states like how the sports books do. Value. Let's talk and look at Genius Sports. Looking at this chart, we can do some quick math. Let's play around with some numbers, shall we? They've been growing their revenue at roughly, all rough numbers, so calm down, roughly 20-25%, somewhere in there. So let's say that they keep growing revenue at 22% a year. They'll end 2024 at roughly $500 million in revenue. That gives them $744 million of revenue by the end of 2027. For the year in 2027, they'll generate roughly $744 million of revenue. They're currently trading with an EV enterprise value of $1.1 billion at a last 12 months 2.5 times EV to sales. That's the current multiples. If their EV magically doesn't change, then this would put them by 2027 an EV to sales of 1.5 come 2027. In reality, their EV would change, but their market cap wouldn't necessarily. Their EV could technically not change if they used accumulated cash to pay down debt. But it's worth mentioning that one of the reasons I like GENI is because it has very little debt. It actually has net cash. So, yeah. If they maintain their current last 12 month 2.5 times EV to sales multiple, then that would put their EV at 1.86 billion or 69% higher. That's an annual return of 27.6%. Back in July of 2022, when the CPI was going up and Jerome Powell was hiking rates, their LTM EV to sales multiple dropped down to 1.6 times. If it traded down to that multiple as of today, then that would be a 37% drawdown. So you could say that you have roughly 2-to-1 odds. Risk 37% to make 69%. with potential annualized returns of 27.6%. FYI, I'm currently taking that bet. As always, you should check my math. Over the last couple of years, I've been told that I'm not a scientist and that numbers don't lie, which I guess means that you shouldn't trust me, but you should trust my numbers? The point here is don't go off my numbers and plug and play your own. Do your own due diligence. I've also suffered attempted gaslightings, instructions, that people need to appeal to experts and not to think for themselves. The consequence of that is that I'm not a reputable authority figure. Of course, verifying the accuracy of my claims would demonstrate that you're thinking for yourself, and those two things also contradict each other. But hey, that's what pseudoscience is all about. Another way of looking at GENI is the following. COIFIN seems to show them improving EBITDA margins by 5% a quarter. For simplicity's sake, let's extrapolate that. This means that it will take them roughly 1.5 to 2 years to hit their long-term EBITDA margin target of at least 30%. That's what they say in the conference call. You go look it up. That's what they say. We should be mindful that their EV to EBITDA multiple compression keeps falling. Right now it's sitting at 12 times. Let's say that doesn't fall any further. If they continue to grow revenue at roughly 20%, then they'll have $626 million in revenue in 2 years' time. That would be midpoint of 2026. At 30% EBITDA margins, that would give them $187.92 million in EBITDA. You times that by 12 times EBITDA multiple, and you get roughly a market cap 2.255 billion. I say roughly, and then I give you a specific number to the third, the third decimal point like that, which is funny. But just know that the things I say, they're directional, and I operate in life with enough margin of safety, let's say, or I try to, or I pretend to, that it's like, oh, maybe I'm wrong by a multiple, or I'm off by $250 million, or this. It's like, well, sometimes you really screw it up, but so anyway. So that'd give them a market cap of $2.25 billion. Their current market cap is $1.15 billion. This gives us a 96% upside in a 2-year time frame. Or if their EBITDA multiple compresses down to 6 times instead of 12 times, which it's currently at, then the stock would be flat, which means in 2 years' time you made no money, which you could say opportunity cost, all else being equal. You could have been in a money market fund, made 10%, 11%, whatever, and therefore there's opportunity cost. So or if you're like me, S&P average, you just call it 8 to 10%, so that's a 16 to 20% opportunity cost. So, either their EBITDA margins are going to wildly inflect or continue their normal trajectory. I don't know why I had to be so dramatic about that. Wildly inflect over the next 2 years as they keep guiding up, or it's going to take longer than 2 years for them to hit their goal. The phrase long-term goal gives me pause, as the management team has said that the 30% EBITDA margins is their long-term goal. The reason it gives me pause is if it was this year's full year guidance, they would just say that, which means that we can reasonably say that that's not their goal by the end of 2024. And if it was 2025 guidance, they would just say that too. Therefore, for them to say long-term goal tells me that they don't plan on hitting 30% margins for at least another 6 quarters. That's how I'm reading into it. And with that said, I hope you enjoyed reading this, or in this case, listening to it. Speaking of reading, I'd recommend that you go read the write-up that Voss Capital did on GENI in their Q1 2024 quarterly letter, link in the article. It's nice to know that people I respect are seeing value in names that I've entered a position into. Voss is really cool. I would actually recommend, if anything in life, that you go read their articles, their blog, their research. I'm not really sure what it's titled, but that's good stuff. They have one on the Japanese bubble. That is a really good read. And then, oh, they have another really good read. I can't think of what it's called. They also have a multi-part series on the housing industry, which is well put together as far as I'm concerned. But smart people over there, worth a read, worth a follow on Twitter for them. Just get to know them, get to understand how they think, what they do. But nonetheless, there's the link. You can go read what they have to say in a much shorter and perhaps more coherent fashion and how they're viewing things. So yeah. With that said, thank you for watching and listening, and until next time.